Good afternoon, everyone. It is Monday, March 2nd. It's about 17 minutes after 4 p.m. The market's now closed, and I thought it would be a good opportunity to take a few minutes and do a quick video on a couple things. One is the Blunhouse TAZ score dashboard and the signal script. I'd like to just walk you through quickly on what those settings look like, how to use them briefly, and then how to use them together to help make more decisive with a higher probability of winning. That's what we're trying to do here today. We're going to show you how to use those two together to do just that. Now, all of this will work fractally. In other words, on any time frame, you can use these scripts together or independently. So you're not married to a time frame at all. But what I want to do is I want to take you into the settings, and there's a couple ways to get there. You can just click on anything that's active within your script, and it'll bring up the settings, or you go into your panel and go into the settings just to the left. Either way, it gets you there. Okay, so we're just going to go in through the clicking on an indicator. So we've got a couple things, and ultimately I'm going to go slow enough so that you can capture these settings on your screen and get a chance to drop them in either right now or after you've done watching this video. But we have a couple choices, and this is the updated version. So first off, we have show strategy EMAs. So these are the defaults, the 5 and the 8, as we typically use in Blunhouse. Now, if you want to change those, by all means, you can change them. Like, this is built to be flexible, so you have any opportunity to change them up or down. This will be the default to show them on your chart. Okay? Just by clicking that box. Now, the next component that you're looking at right in here where it says leverage and targets is the trade management component. So in your first box, you have leverage, 1 equals spot. And then 5, 10, 15, 20, whatever it is that you want to use, all adjustable. We give you 3 take profit zones. All right, now, just for interest's sake, we have take profit at 20. Now we can change this to 50 just to kind of show some movement on the chart. We have a stop loss built in. You can adjust these levels to anything you want. This is just for an example, right? You can just click up or down or type them in yourself. And then there's also an option for a trailing stop. So you can have a trailing stop set in addition to your take profit levels to help lock in profits if there's any volatility that comes unexpectedly. Underneath here, we have show TP and stop loss brackets. And then we have auto hide when they're hit. Now you'll notice that a few of them have gone on and off. That's simply because, as you can see down here to the very left, just get rid of this, there's your buy signal. And there we go. There is your buy signal. And our take profit levels were very clear. There's your stop loss, there's your 20, there's your 30, and there's your 60. But when we show auto hide, it'll remove the ones that were hit for a couple reasons. It declutters your chart a little bit and then helps give you a visible representation of where the movement was. But that's entirely up to you. I typically, if I'm using this section, I typically have them set to auto hide. But that's just me. Okay. The next thing you're going to see when you first load this up, you're going to see a lot of yellow bars at the bottom or circles or however they may appear. That is simply because of how it comes preloaded. what I'd like you to do under global settings, make sure that these two boxes are unchecked. And this is set to disabled. All right, that should start to fix that. We'll get to the rest of it in a minute. Then you have 9 moving average slots. Okay, now I typically use, we have the 5 and the 8 that we've talked about. If you don't have that default setting clicked, then you can still use them in here. Okay? And if you do, then they have that little bull bear change of color indication as well. So you have the 2 choices. Secondly, you can then fill in all of your other MAs. So as an example, I use a bright green for my 20, a light blue for the 50, a purple for the 100, try and get a bright red for the 200, pink is the 500, and then amber is the 1000 day. Those are all SMAs. Okay, typically what I will do is I will set a 200 EMA in this spot as well, and then I just flick it on and off whenever I want to see that EMA. Okay, that's basically what I do with that last field. So that is basically, we'll walk you through this thing again. I'm using these 2. If I uncheck this, by the way, just to give you an idea, and go back in and light up. There we go. We're going to see the 5 and 8 come on again, but just in the white and yellow with the 5 EMA switching, like you see here, from white to red. That's it. You don't have to worry about too much about that. And then everything else looks like this. Okay, now, I do not have the volume profile on this particular chart at the moment. But if you want to activate it, you just, under volume profile, click that, and it will load. Just slide your field over and you'll see the bars. Why don't we do that? All right. There is your volume profile. You have the opportunity to change the color from green to blue to white to red to whatever you want it to be. And you also have an opportunity to display the point of control and the upper and lower value ranges. And these are the area percentages that I'm using. If you want to use visible range, which means everything that's visible on your screen from a candle perspective will include the volume profile. In other words, it will look back as far as you're allowing it to see on your screen. If you uncheck it, it's defaulted to 200. Sometimes when you check it, it gets a little rastered. It depends on the time frame, depends on the asset. But 9 times out of 10 is perfectly fine. But if that does happen, just go in and try and uncheck that and see if that fixes your problem. Okay? So again, that's what everything's going to look like under the Inputs tab. There you go. Again, all of these things are customizable. Now we're going to go to Style. I have simply just replicated the colors that I use in my MAs and drop them in there. It's not necessary, but it's just what I do. Also note what's unchecked. Okay, so make sure that's unchecked. And then everything else, based on how we just set it up, because remember we switched this off, so we're running off the other 2 MAs. But everything else should look just as you see here. If you want to see the trailing stop levels on and off, just like so. Okay? I'm just clicking them off only to unclutter the chart. I also uncheck all the clouds. And then everything else that you see should look like this. in the left panel, you'll see this is where input values. This is what it's talking about. So if I check this, and then I drop down the menu, because there's so much built into this indicator, and we have so much going on right now that it's showing us that, it kind of moves across your screen, and we don't want that, do we? So what we're going to do, we're just going to scroll down, uncheck inputs in status bar under input values, and it goes away. And you can do that in any trading view indicator, by the way. That same option should be there. If you're ever in a situation where you find that, again, scroll down and eventually you'll see it. And that makes things a little cleaner. Under visibility, there's nothing to adjust. Okay, nothing to adjust. These are the buy labels and sell labels, right? Right in here. I can choose where I see them. I'm showing that below the bar. That's how I prefer it. Play around with those settings. That's entirely up to you. These are the take profit colors. Right? And again, you know, I have them different shades of green. You can do whatever you want. If you want to change those colors, that's entirely up to you. All of that is customizable. Okay? So that is the Blunthouse signals or pro indicator as it shows up in your panel. Now I'm just going to remove these for a moment. There we go. Now, this is a 4-hour chart of gold. And what I will do is remove the volume profile as well because I want to keep the chart clear. So this chart of gold, this is a 4-hour, and I'm going to focus on the 4-hour charts and the daily charts. I'm not going to drop down into super small time frames for this video. One of the things that we try and do is take the anxiety and all of the indecision and all of the things that we don't understand, and quite honestly probably couldn't if we wanted to understand, to take all of that out of our head and just focus on what the chart is telling us to do. So those of you that know how we work in here, we're basically working off of fibs, fractals, and filters. That's the basis of our methodology. And from there, we've developed tools to help take the anxiety and the angst out of our trading while still mitigating risk. And this script is one of the things that we've developed to do that. And on this 4-hour chart, we get a very clear buy signal. And we like to use the 4-hour chart as an on and off ramp onto the daily or off the daily. And so if we can get a good 4-hour signal, and that 4-hour signal finds its way onto the daily as a buy signal, and so on and so on, well, that's the kind of confluence that we want. This is chop, and we're not too concerned about this. Right? And we can talk about these signals in a second. We don't want to filter everything out because then we run the risk of filtering out something meaningful when we need to see it. But we're going to show you how to filter them out through other means. So one of the things that we don't want to do is argue with our chart. We look for breakouts and breakdowns. We don't necessarily want to trade the chop, right? That's just price action that's going nowhere. But we do like the breakouts and breakdowns. This is an example of just getting a buy signal on our 4-hour chart and doing what we're told. Right? It says buy. Okay, so let's just buy. And if we use our, as an example, if we use our take profit brackets, I'll let them stay for this purpose. You can see that we have a 5% stop loss set. And then I think that was like 30, 60, 75, whatever we had it set to. Well, did we get stopped out? No. We actually hit all of our levels. So this was 60%. And it's nice to be able to see these levels on your chart. And when you're trading one of the handful of assets that you're regularly trading, you're going to get really familiar with the types of waves that that asset has. And you're going to get really comfortable almost instinctively knowing what those take profit levels are going to look like on your chart. But this is going to help you see them visually. So you would have taken out all your levels, right? This is choppy, and we don't want to trade stuff where we don't get any big divergence up or down in our T line and 5 EMA. And we'll address this through something else in a moment. But ultimately, after all these little dojis, you get a little buy signal. It doesn't seem like much at the time, but lo and behold, it may or may not have stopped you out. Now that I look at that little candle there, that would be really close. But if it did, well then, you just took a small loss. Waiting for, it's going to break out, right? When it comes out of the chop, it's going with 3 options, up, down, and sideways. So you've used up sideways, so you're looking for up or down, right? You get another opportunity here to enter. This one really takes off. And obviously you take out these levels as well. And that's where the mechanics come in, right? This is the stuff that kind of keeps you honest. But knowing how we trade our system, knowing that this is still diverged open and to the right, that tells us what? It tells us that we're still in a bullish trend, and that we can be prepared to do this all over again, right? Nice move up, slight retracement. We're holding the T line. We're holding all this in here. Yeah, perhaps we bounce and take out the previous wave's high. Who knows? But how can we help validate what we see on the chart? Well, I'm just going to remove this again. Let's bring up our Z-score dashboard. And right now I'm showing it as a line. And you have lots of options. You can select the line like you see, or perhaps you'll often see on my charts that, which is area. You can also use a histogram or columns, I believe, yep. However, it's easier for you to see it, as long as you're interpreting what you see the same way. And so I'll just leave it with area for a moment because it'll make it easier for the viewers to see this, I'm sure, online as well. There we go. So, what do we know about what the Z-scores dashboard is telling us? Well, it's a measure of relative strength. We have the option of comparing relative strength to a set of benchmarks, and we have the ability to use each independent screen view to do the same on that individual ticker, to read the relative strength on that time frame on that asset. And that's what we're doing. That's what this is showing us. So all of this green above this 0 level, that's what this line is here. And you want to change that line, you want to make it solid. Well, hey, let's make it solid. We can do that. Might make it easier to see. So all of this is very strong relative strength on this 4-hour time frame. And these little moves below the 0 level aren't really measuring anything, right? They're not an expression of a lack of relative strength or anything like that. These are just picking up the minutia of the market on this time frame, because it's important to remember that on the daily, all of this has stayed very positive. So even though you see these little tiny hiccups here and there, with the exception of that big drop off, there really isn't a massive lag or pullback in the relative strength. And relative strength is not price, and most of you know that. But why do we want to use it here? Well, one of the things it does is it helps confirm movements in price. And we're always looking for confirmation, aren't we? So here we have a 4-hour gold chart. We produce a buy signal on our script as the relative strength broke the 0 level. And then you had a nice run higher. The relative strength supports the price movement. So when you have the relative strength, chances are you're going to have that support as well. Notice here, though, what happens? This is standard deviation levels, so you have 2 standard deviations down. When you get over that 2 level, it's a little bit of an anomaly, so think of it as that hot day in the dead of winter or the cold day in summer. Right? It's not normal, doesn't happen very often, and you kind of know that it won't last very long, and it doesn't. But the relative strength, although it waned, did you know what happened with price? Price really didn't go anywhere. It just basically went sideways. And all of a sudden, relative strength comes back in again. There's our buy signal. Let me just make this a little more clear. There's the buy signal on the 4-hour chart, coming out of a lot of chop where price was going nowhere. All of a sudden, you get this big break above 0, and price just goes boom. Now, quite often these signals line up, and we don't live in a perfect world all the time. That's why I wanted to show you this example. But we get an early buy signal. So if we were just using our signal script, we'd be like, okay, we go in sideways long enough, maybe the mood's right, so I'm going to take that buy signal. You have 3 candles of really going nowhere, but still no sell signal. And then the relative strength comes back in and price follows. Now if we work to a daily chart, let me take this off. There's a nice example of relative strength coming back in and holding the 0 level. Here's another example. Here is on our entry candle. You have that break above with some velocity upwards at the 0 level. Like, it's not an accident that these things seem to happen at those locations. You'll see them time and time again. Do they all turn out to be runners? Of course not. Right? But here's your sell signal, and it meant something. It broke the 0 level. Was it a prolonged move? No, but boy, because it wasn't, aren't you looking to go long at that point? These ones line up perfectly. And when you're going sideways or you feel you're not going up at the pace you'd like, pay attention to what this tells you. Because as long as the relative strength is holding, the buyers are still hanging around. And that's really key. When to know that the buyers are still hanging around. Here's another example. The Bitcoin 4-hour chart. Things get really sketchy when you break the 0 level. But we're looking for the moves that hopefully you're going to run. So, when your z-score is well extended above that 2 level, what's going to happen when it wanes? Price may wane as well. Now, you're also going to see instances where price is rising, but relative strength is going in the opposite direction. And what does that tell us, that divergence? Well, if price is rising and relative strength is falling, maybe we're being told that the smart money is exiting, and it's simply momentum that's keeping price moving higher. Trying to find an example of that, but you'll see it on your own charts, right? And when you see it, pay attention to it, right? So you've got relative strength fading, price rising. This might be an example of it, right? Who knows? We'll find out. But when you see it, pay attention, because the relative strength will be fading as price is rising, and then you'll notice it breaks 0, and then all of a sudden, that's when trouble starts. So now that 4-hour signal is working its way onto the daily. So what we're seeing here is the money, the relative strength, starting to come back into the asset. So while everyone felt like time was standing still because this thing was going nowhere, why was it going nowhere? And what were you waiting to see on your chart to change? This. Show me a buy signal when z-score breaks 0. That's what we want to see. That's the kind of confirmation that we are looking for. And when it comes to the indicator itself, setting it up is really easy. So we can do a lot here, right? Listen, we could just set this to, let's take BTC, USD. So that's going to be our primary core benchmark. So let's say we're setting up something for crypto, because a lot of you guys want to trade crypto. That's fine. So here's Ethereum. We're going to put that in there. Then we're going to drop in Solana. What else can we put in here? XMR USD. Right, just to get an idea. And then lastly, maybe we throw in, I don't know, Doge. Only because it's the first thing that comes to my mind. All right. So now when I click OK, our whole dashboard is set for this crypto mix. So now what I can do is, if I want to look at, I don't know, let's find something interesting. XDC. How does XDC compare to Bitcoin, Solana, Ethereum, XMR, and Doge? On this time frame, not very well. It's underperforming. In other words, you probably don't want to be trading it. You would want to be trading one of these guys. And I'm just going to click through some tickers so that you can see how it changes. This is scale. Scale not quite as terrible, but you get the point. SHIB, same thing. SHIB is a void. All this other stuff is a void. So the strongest beating Bitcoin, Solana, and Ethereum. And you can do this for any sector you want. If you wanted to do something for the oil and gas sector, you might want your core asset to be, I don't know, you might want it to be WTI, and then you might want to compare everything against the WTI. It's up to you. You can do whatever you want. And always know what's the laggard, and what's the leader, and have a visual representation on your screen, and then simply trade your chart. Just follow the chart from there. That's all you have to do. Any time frame, any asset, is all you have to do is follow the chart. I know you guys love this. This is Aster. Still not doing anything. Okay. Very, very easy to set this up and very easy to use. So this is kind of interesting. Aren't we waiting for something to happen here? Chop, 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 right? You don't really break the standard deviations to the upside or downside. Chop, chop, chop. You don't want to take those signals. You're looking for these as entries? Yes. The ones that are going to be worthwhile, typically you've got the divergence down and to the right if you were short and up and to the right if you're long, like this. Right? And you can see how the relative strength was supportive of price. And after a big impulse move like this, I actually pay a lot of attention to when relative strength starts to wane after an extended run. And really, right in here is when it kind of got tired, isn't it? You still had, I guess this is an example like we spoke about before, where you still have price kind of moving higher, but the relative strength was waning to the downside. That kind of divergence usually is a tell. And this was kind of a slow grind down, and still is. So that's it, right? Just simply look for confirmation of our buy signals and sell signals, long or short. They won't always line up perfectly, but you're looking for validation that you're on the right side of the trade at the right time. And it doesn't matter what you look at, you can read it. Now, when you see a chart like this, with all of this relative strength, obviously, that's still a strong chart. Even this big monster red candle didn't break the zero level. And, is this still a bullish chart? It is, right? So as long as we're trading above the T line and the 5 EMA, that's still bullish. Are you diverged open up and to the right? Yeah. What would we be looking at? Well, we broke through the 20, and we had a good idea that we were going to do that because this was diverged open with momentum. Makes it real difficult. Same here with the 50. We took care of that already. And the 200. So now that you broke the 50, you broke the 20, you're still bullish. What do you think price is looking for? Well, this certainly was a level, but now it's going to look for this. This retracement today, still, at least at this point, with 8 minutes left on this candle, what's left on the day? An hour or two? No, 8 minutes. This candle will leave us bullish. Still trading above, still diverged open and to the right, still working under a buy signal, and still have relative strength. The ones we watch for are the pullbacks where price rolls over and the relative strength breaks zero. And then the reverse to the upside. Okay. And again, it doesn't matter what we look at, whether they be stocks, whether they be commodities, it does not matter. This is American Express. Let's go to a weekly chart. I'm not going to worry about the comparison because that's all crypto. And how do we reset it? Well, quite simply, we just hit that refresh or reload button, and it changes them back to the defaults. Okay, so now we've got American Express compared to the SPY or SPX, Gold, XLK, XLF, and IBIT, which is the Bitcoin ETF. And it's sitting in the second last spot, which tells us, yeah, that's not something that we want to be trading long right yet. And what's the chart tell us? Well, are you open, diverge down and to the right? Yeah. Right, so here's your break of the 0 level on the Z-score, and there's our confirmation to short. And regardless of how you interpreted that and which one you took, or whether you just felt comfortable that the trend was going in the direction that you were going to trade, you'd still be short. This weekly candle that's not testing the 5 EMA or the T-line is an expression of bearishness. It's basically price hanging around waiting for time to catch up. All right, now we like buying weekly charts. You know, here's a great entry off a weekly chart with confirmation. And quite honestly, you might even still be in this trade, right? But you can see no relative strength for an extended period of time, and all of a sudden you break it and produce a buy signal. Well, that's meaningful. And to see it on the monthly chart, it's, you know, still works. So when does it get tricky? When you break that 0 level. And, you know, you can see that's exactly what happened. So this is just a real nice way. There's a monthly example, buy signal, breaking to the upside, and just stay long. It's a great way to validate whether or not you're on the right side. We have a really good system anyways, the way that we use our T-line and 5 EMA. But when you have the opportunity to add in this level as in addition to it, in my opinion, it makes it that much stronger. So I hope I answered a lot of questions that I know you have on how to set these things up and how to use them together. And if you have other questions, know that you can reach out anytime. If you follow us at Blunthouse TA on YouTube, we will keep you constantly updated through there. I'm going to start to drive more traffic there, I think, as well. It's a little more organized space for me to put things out. So for now, I think that's it. You guys know how I love that for now, but I will see you again. Hopefully this was just what you needed. And if not, reach out to me directly and we'll get you fixed up. Have a great day and happy trading. Bye for now.